Hello and welcome. Today we have a very distinguished guest, joining us, Stephen Quarshie. He wears a lot of hats. He's a Forex Risk Manager. He's a private account manager and a trading mentor as well, and also President of OMSU13. Stephen, welcome to the show.
Thank you very much. Thank you very much. It's a pleasure. It's a pleasure.
It's great to have you here. So kind of to kick off, would love to kind of hear more about yourself and I guess a bit more about, how you got into trading in the first place.
First of all, I want to just say a big thank you to you and your team. It was just a good thing that, we need to put this interview together so that, I get to share some of my experiences with you and, the whole world, because I know this is going to travel very far. I am a person who is interested in pushing people to the next level. I am a mind that I want to move more than 100,000 people towards wealth and happiness. That is my own agenda that I am pursuing. I'm very keen on leadership, and that is why, for my old school, they've been able to nominate me as the president. Right now, if you think about me as Stephen Quarshie, one of the things that will come into your mind is leadership. And what am I leading people to? I'm just leading people to wealth and happiness. It is on this quest that one of my classmates in the university, he introduced me to Forex for the first time. He introduced me to Forex for the first time at the University of Ghana. He told me that he has stumbled on something, so he wanted to share it with me. And he needed to do an account registration. And because I was the only person at the time who had a passport for the proof of identity registration, so I was called upon to use my passport to do the registration. And we started from there. That was how I was able to get into the space.
Excellent. That's really good. Have you sort of always been, interested in the financial markets, or did it sort of trigger there when he sort of first introduced you to the markets?
Right. I've always been interested in finance. I have my educational background in both business and finance. In high school, I did business in Mauli School. I pursued business, and when I came to the university, I did business administration at University of Ghana, where I majored in banking and finance. So you could see that I'm actually following a trend of finance. And when I did my master's in finance, Master of Philosophy in Finance. It means I'm deep-rooted in finance. I love finance. I love analysis. I love to forecast. I like to do projections into the future. That is who I am. I like mathematics. I like to work with these numbers and, create some intuition behind those numbers for people to, make decisions with it. I'm always a finance guy.
So obviously, like you mentioned, you've been working both in public and private institutions. How do you sort of leverage this experience in your training and sort of mentoring aspiring traders? Or how do you draw that knowledge from, your private and public institutions in your sort of goal in mentoring traders?
Yeah, first of all, one lesson I took from, working at a public service is teamwork, team building. That is one big lesson I took, because I was at the time working with the National Identification Authority, NIA. I was a field officer. So we need to go to the field with a lot of people with different roles, but we need to work together to achieve a common goal of registering Ghanaians to have a national identification card. So even though we played different roles, we all had one goal. And that is how I begin to, liaise with people, work together with people, even though we have different characteristics, but we just need to find a way to come together. And that team building has actually helped me, because my focus was all on people. I was interested in learning. I wanted to learn. I wanted to know more about people. It is that leverage that I brought it into my trading life, because trading is all about people. If you don't know people, you can't actually advance. And at the private side too, I was managing a company, so I had to lead them, make decisions, and all those things.
Right.
For me, all those things came into play for me. So when I actually ventured into forex trading, I actually knew what I wanted to do. I just wanted to impact people positively and it's all about people.
Right, right, exactly. No, that's obviously a very noble goal. Talking a bit about obviously, your trading strategies on your YouTube channel. You obviously describe yourself as the pips leader. Could you maybe share a bit more about your sort of the trading philosophy and the strategies that you actually teach to your clients and to your traders? Like, what specifically makes your strategy sort of more special in that approach? As opposed to the other sort of strategies or philosophies out there.
First of all, I always tell my students this, that there are three components of the market. To become successful in trading, you need three components. The first is the strategy, the second is risk management, and the third is mental management, which you can call psychology. And I always tell them that strategy, the component of strategy in a successful trading is just about 10%. So in as much as we are all happy talking about strategies, searching for the holy grail and all those stuff, we just need to understand that the component of strategy in the entire trading system is just about 10%. But without it, you wouldn't be able to make informed decisions. So in as much as it is 10%, it is also vital to the 90% of risk management and mental management. Now, this is how I approach the market. I always want to be different from what the majority is doing, because if you can agree with me, the majority is always wrong. I've got this idea about the financial market and the goods market, how it operates. Most of us are well vested in the goods market. We know how to buy our TV, we know how to buy our mobile phones, we know how to buy our food. And the ideology in the goods market is always to buy low and to sell at a high price. That is the concept of the goods market. So I buy my TV at a lower price, I go to the market, I sell it at a higher price, then I make profit. But I believe that when you come into the financial market, it has a different approach. And that approach is for you to buy high and sell higher. And it is also for you to sell low and sell and buy it lower to make profit. So my entire approach is all about trend following, so that when the market is pushing up, I don't think of selling. I don't want to sell high. I want to sell at the lowest price and buy it back at another low price. I want to buy at the high price and sell it at the higher price, because I believe market has the probability to continue than for it to stagnate or consolidate.
Absolutely, absolutely. I mean, there's the good old saying, right? The trend is your friend, and I
Yes.
think that holds a lot of truth.
Yes.
What would you say to, I guess, mentors or traders that say, well, that's great in trending markets, but how do you successfully trade where the markets are not trending? For an example, when you have a sideways markets, which obviously you've seen a couple of years. The market has sort of been flat, and the daily average has obviously been sort of been shrinking as well. How do you sort of I guess navigate around those challenges in a market that is necessarily not trending as it should?
Yeah, one of the views I always hold is that it is not compulsory for traders to engage in all kinds of market. The market moves in three ways. The first way is for the market to move in an uptrend, or the market is going to move in a downtrend, or the market is going to move sideways. So we can actually decide as traders that we don't want to engage in all kinds of market. We can just decide that we want to engage in trending markets, so that we eliminate the 1/3, which is the consolidation market, if you can identify it. Because if you study pound USD, GBP USD from November, middle of December to January, it has been consolidating within about 160 to 170 pips. So long as I identify that consolidation, I just block the top and I block the down with my price range. Then I begin to avoid that market. I look for another trending market. Every trader has a style. You need to trade a style that fits your personality. I always believe that price should continue. I don't want price to stagnate, and I also don't want to buy at the low price, and I don't want to sell at the high price. So I just want to avoid consolidation market. But if consolidation is somebody's style, the person can also cope with it, because this is how I define a strategy. Strategy is anything that allows you to enter the market consistently without fear or favor. If you have something that gives you that, you are good. We are all good.
Absolutely, absolutely. I couldn't agree more. I think most of the most sort of profitable traders that I personally know are actually traders that don't trade much at all. You know, if they see too much in the risk in the market, they stay away. If they see a setup that is not aligning in terms of all of their indicators and what they're specifically looking for, then typically they stay away from the markets. And unfortunately, most of the losing traders that I know are the ones that overtrade all the time. They're in trending markets, they're in sideways markets. They really don't have any plan, a strategy or an exit plan, and also their like you said, psychology and mental checks, if you will, are not really there either. Which is, like you said, almost 90% of trading is really your psychology, right?
Yeah, perfectly said. And I think it's actually a positive view that most traders need to take. It sometimes takes new traders a longer time, about 2 to 3 years, to come into acceptance of this fact. It takes them a longer time. So where we do the mentorship is to cut short that long time, to bring them into a quick realization that this is how the market actually works. You don't have to be in it multiple times. You don't have to trade a lot of times to make money. In fact, less is more. Less is always more, and simplicity is comfort.
Absolutely, I couldn't agree more. I couldn't agree more. So I guess with your focus on specifically training traders in Africa, obviously Africa is a great emerging sort of continent. There's a lot of traders that are discovering the markets, the forex markets, and the equities markets. I guess my question would be, how do you sort of see this landscape evolving in Africa right now? And I guess what impact do you hope sort of, making and I guess empowering individuals in generating income from the FX industry and the FX markets?
Yeah, one thing I'll say is that Africa is the next big thing. Africa is the next big thing for FX, futures, stocks, any other financial trading. Africa is the next big thing. And when you look at Africa, there are a lot of countries that are the giants in FX or in trading. They pull a lot of volume. If you look at South Africa, they are pulling a lot of volume. If you look at Nigeria, they are pulling a lot of volume. If you look at Kenya and some emerging countries, they are pulling a lot of volume. So this should be an encouragement for the new traders that are coming up within the African space, that it is possible for us to make money in this space, so long as we stick with the principles. It is not far-fetched. Forex gives a fair playing ground for everybody. It doesn't matter whether you are in Asia, it doesn't matter whether you are in Europe. So long as you have your equity, you have your internet, you have your device, then it is easy for you to enter into this space. So this is one of the best opportunity for Africa to take advantage of this market.
Would you say there's any sort of a specific challenges or opportunities unique to the African market that you address in your mentorship, for an example?
Okay, one of the things is that people have low income, and it reflects in the low capital that they used to trade. And one of the things I believe is that low capital forces traders to take high risk. And when they take high risk, there is a high chance for them to blow out their accounts. So those are the challenges. So sometimes maybe people shouldn't just rush into full-time trading. They should work, save some funds, and while they are trading on the side, they can really, patch up the funds with their capital so that they can actually successfully trade. In terms of challenges, Africa has this thing, our address systems are actually, they are not perfect. And when it comes to account registration and verification, there is a very big challenge for Africans, especially where I am, Ghana. If you have to do proof of address, if you have to do your proof of address, it's a big challenge because the brokers are not going to accept PO box as proof of address, and places where people are staying, they are not the owners of the place, so they don't have the title on a document or their name on the document to show as proof of address. So those are some of the challenges that Africans face, or some of the brokers even face to get a lot of clients on board from Africa.
Makes sense. So I guess in a very sort of rapidly changing financial markets that we're seeing in today's world, I guess what are the key factors that you consider when you're sort of making your market analysis, for an example? And I guess additional in this current economic climate that we're seeing right now, are there any certain assets or sectors that you believe are sort of particularly promising or risky for that matter?
Currently, if you look at the crypto space is actually making a lot of advancements, and there are a lot of things happening in that space where people can actually do their research and take advantage of that space, the crypto space. Otherwise, forex is just countries' currencies. There is nothing much. There is nothing different apart from political news, apart from certain economic data that will be released. Apart from those things, there is pretty nothing new in forex, and especially for technical analysts, we only use the fundamental news to bring volatility or movements into the market. Apart from that, there is nothing. The only thing people need to do is to actually invest time to study DeFi, decentralized finance, and know more about Web3 and the blockchain technology. Those are some of the things that people can look at in this space.
Mm-hmm. Would you say these asset classes are growing, in the African continent, particularly in Ghana? Do you see, I guess, forex or equities and I guess crypto as a whole growing, and there's a lot of sort of interest in these asset classes right now?
Yes, there's a lot of interest in crypto. There's a lot of interest in crypto, even more than forex, because forex is, let's say, the standard, the normal stuff, and crypto is emerging. Crypto is always advancing. There is something new. There is always a new coin. There is always a new tech coming up. So that is where people have their focus on. And recently in Ghana, there has been a shift. Some of the youth are engaged in sports betting. Okay, and the government have also decided to impose tax on sports betting, and is beginning to cause people to shift their attention from sports betting to look at other profitable ventures. And one of the closest thing they can get is to look at the forex.
Right. So they're basically moving away from sports betting more into the forex market and the crypto market, essentially.
Exactly. Perfect.
I guess in your sort of extensive trading career that spans several years now, how do you personally, I guess, approach and cope with challenges or losses, for an example? I'm sure everybody has a sort of trading loss that they remember that was a bit of a eureka moment that oh snap, I shouldn't do this again. Is there any specific moment that you recall that really kind of taught you a lot about the markets or the dynamics of the market, or really sort of change your trajectory in trading?
Yeah, that was a moment where I told you earlier that I was working with the National Identification Authority as a field officer, and around the same time I was still trading. I've been trading since my university days, 2017. So when I was working, I was equally trading, and I've entered a gold position for a buy. I entered a buy gold position, and gold kept moving down. And I did my analysis, I did everything, and I see that setup as A plus setup. Ever since, I don't have anything like A plus setup. I saw that setup as A plus, and when I did my buy and it was still moving down, I just have to wait and added more position to it at the downside. and the market was still melting. I added more position to a point where my account just got vanished. I was just sweating. I couldn't sit on my decks. It was from there that I had a different approach, and I realized that then I took this one rule that never add to losing trades. Never add to losing trade. That is the loser's way of trading, of adding to losing trades. That is one rule that I took from that lesson.
So essentially, what you're saying is, if you enter into a position and the market, goes against you, for an example, you would never sort of dollar cost average it. You would never sort of add into the losing positions if it goes against you. So rather put a stop loss and calculate your risk, and if it doesn't, go your way, you cut it there. You eat the stop loss, and then you take a new trade effectively.
Perfect. And one thing that I adopted, and this is from one man called Tom Hogarth. I believe you know Tom Hogarth from the industry. He wrote Best Losers Win, the book Best Losers Win. His solution to avoid adding to losing trades is to just add to winning trades.
Oh, wow. Okay. When the trend goes with you, you just add into the trend, basically.
Yes.
Okay.
Immediately you begin to think that way, your desire to add to losing trades will quickly vanish, because you have a different mindset of adding to winning trades, and everything just switch for you.
Right. So that's effectively the opposite of martingale, right? I mean,
Yes.
because martingale is effectively, adding into losing positions, but this is really the opposite of that, effectively.
Perfect. That is why from the beginning I said, majority think wrongly in this market, therefore they act wrongly. When you begin to think differently from what the majority is thinking, you also act differently, and it will reflect in your trading results.
Exactly. So bottom line, it's all about psychology, right?
Perfectly said.
Exactly. So I guess as we move on to, we're in a new year now, 2024, a lot of exciting stuff happening in the markets, a lot of announcements, potentially rate cuts in the horizon from the Fed, etc. What are your, I guess, best bets? What are you looking for in terms of any particular currency pairs that you think are interesting, any particular equities that you think are interesting, or even cryptos for that matter? What do you think is sort of the best bet for the year of 2024?
For me personally, I'm beginning to learn about the crypto space so that I actually see the opportunities that are in this space. So that's one thing that I would just advise people to do in 2024, because crypto has a lot of big news, coming up, which will present a lot of opportunities for people. But with forex, like I said, there is nothing new. All the news are monthly news, apart from political news and news related to war. There is nothing new in forex. They are just regular news. So we just stick to what we know. We stick to the technical analysis. We make sure that our mental management is top notch, and we just keep trading and expect the best for 2024.
Right. Exactly. No, absolutely. So I guess to kind of wrap up things, Stephen, what advice would you sort of offer, to individuals, especially those new to trading and, the kind of the newbies, on building a sort of and maintaining a resilient mindset for long-term success in the markets? Do you have any sort of any go-to personal strategies that you would like to share that, perhaps can help a lot of new traders in the market?
Yeah, first of all, I would just advise them that this space is a high performance space, and just that the entry barrier is very open, so anybody can enter into the space. When they get opportunity to enter into the space, they need to make sure they get somebody to take them through, like mentorship. That should be the first thing. Education and mentorship should be the first thing they need to look at. And secondly, they need to have a long-term perspective. They shouldn't enter into this space thinking of 1 month, 3 months, 1 year. They should think in terms of, let's say, 5 years, 10 years, 15 years. They need to have the long-term focus, so that when they are struck with difficulties in the short term, they wouldn't give up. They will just keep pushing.
Got it. No, absolutely. That's definitely very good advice. it's all about living to make another trade, right? And being making sure that you're in the markets for the long run, and not just trade for a couple of days and then just blow up, and then that's the end of your trading career. So yeah, and that obviously really ties into the psychology and the mindset that you were talking about before. That's really where it starts, in my opinion.
Yeah, perfect.
Yeah. Stephen, thank you so much. It's been an absolute pleasure. Thank you so much, and we'll make sure to put your links here to your trading courses as well. And best of luck with in the markets.
Thank you very much for this opportunity, and I really thank your assistant. She's done a very good work.
Absolutely. Thank you so much, Stephen.